Welcome back folks to a new video. In this case I will be showing you the strategy that I have used to get funded and that I will be using in order to achieve my first payout. I hope that you enjoy it. Well, these are the two setups that I've been using. The first one is the ICT Silver Bullet, which can be traded from 10 to 11 a.m. New York local time. What do we need to trade it? We must have a clear draw on liquidity in order to trust that the fair value gap will reject price. We also need a potential draw on liquidity that offers 20 or more points. This is a really easy setup that anyone could trade. Now we move into the 2022 model. This one is easy too, but it tends to trick newbies into trading patterns, when it does not work like that. In order to trade it you have to set rules, such as a liquidity sweep, a displacement leg, a fair value gap created into the displacement leg and a market structure shift towards a clear draw on liquidity. By the way, you can combine both setups, since they tend to form together if you trade the New York AM session. This is a clear example of the ICT Silver Bullet that I personally used to get my last account funded. As you can see, price displaced lower towards a clear draw on liquidity, which was an obvious sell-side liquidity pool. I wanted to get into the trade earlier, but as you see, it did not offer any other entry, and price was extremely heavy. Due to its heaviness, I decided to enter short on that FVG and place my stop loss here. Then rode it until the sell-side liquidity pool was raided, a simple and easy trade that you can take if you know what you are looking for in price. Well, here we have the 2022 model setup. As you can see, we first had a liquidity sweep, then a market structure shift with a displacement leg that formed a fair value gap that I used to go short on this example. Then before going lower, it created another FVG that I used to add another contract, since I was sure that the market was going lower, not only because of the 2022 model, but there was a discount opening range gap too. Risk and money management. For risk purposes I always risk the same amount per trade, which is $300. I aim at least for a 1-to-1 risk-reward ratio. I personally use the long and short positions on TradingView to measure how many contracts I have to use in order to risk those $300. You can adjust it to your preference by changing the amount that you are willing to risk. But for the companies that I use, that is okay. Well, this is the end of the video. It is a short one to get right to the point with the strategy. I will keep you updated with my progress and you can post yours too in our Discord. The link will be in the description. Once again, thank you for watching.